All right, so we said that a partnership will file a partnership tax return, Form 1065 every year, and it's due March 15th, or 2.5 months after the close of the business year. And most partnerships, we said, are on a calendar year basis. So March 15th is the due date, and here's the partnership tax return. But we said no tax is paid on the income, the profits from this partnership. No tax is paid at the partnership level because this ordinary income here on line 22 of $29,217 just gets picked up by the partners, reported to them on Schedule K and K-1 so that they know how much to pick up when they file their 1040. We said Schedule K is the summary of everything on the Schedule K-1s. All the K-1s have to tie into Schedule K, whereas if you only have a partnership with two partners, it's not that big a deal to tie in two K-1s to Schedule K. But if you have a partnership with hundreds and hundreds of partners, then you can see the need for Schedule K. And the whole thing gets filed together, the partnership return with the Schedule K and the K-1s. Let's take a quick look at the K-1s again. You can see that the K-1s is where each one of the items gets reported to the individual partners. And the partners can't fill out their 1040 without getting this Schedule K-1 and putting it into their return, because all the information on the K-1 goes somewhere on the 1040. For example, the ordinary business income, where does that go on the 1040? Well, the ordinary business income from the partnership will go to the new 1040, and you'll see where to pick it up. It'll go on to Schedule 1 of a new 1040, line 17, where it says rental real estate, royalties, partnerships, S corporations. That's where the amount from the first line of the partnership K-1 will be reported. So Chris would have to pick up $14,609 on Schedule 1, line 17 of the 1040. And they might ask you that. They always used to ask that. Now, since it's a brand new exam with the Tax Cuts and Jobs Act, they may not ask that right away, exactly what line does something flow to from the K-1, but you should know that ordinary business income goes to the 1040 on line 17 of Schedule 1. Let's take a look at it again. And you can see line 17 says rental real estate, royalties, partnerships, S corporations. And if this were Chris's return, he'd have to pick up that amount from that partnership right there on line 17. But this isn't Chris's return. This is Phil and Shelley's return. But I'm just showing you where this would go on a 1040 from the partnership K-1. Well, where would the guaranteed payment go? The $24,000. Where would that go on Chris's 1040? It would go in exactly the same place. It would go on line 17 of Schedule 1 of the new 1040. That's where the $24,000 would go. Just like the $14,609 would go there, the $24,000 guaranteed payment would also go to Schedule 1, line 17. Line 17, where it says rental real estate, royalties, partnerships, S corps. That's where the guaranteed payment would go, and any ordinary business income. Okay, now back to the K-1. On the K-1, you also see interest income and dividend income, and the $54 in interest and the $125 in dividends. That has to go to Chris's 1040 also, but that wouldn't go to line 17 of Schedule 1. That's going to go to Schedule B, where interest and dividends go. And here's a look at Schedule B. It says interest and ordinary dividends, and you have the top part of Schedule B for the interest income and the bottom part of Schedule B for the dividends. And that's where interest and dividends will be reported from a K-1 as they flow over to a 1040. Now back to Chris's return. Where would the $1,800 in short-term capital gains, where would that go on the 1040? That would go on Schedule D, where capital gains and losses go. And if this was a long-term capital gain, it would go to the same place, Schedule D of the 1040. And here's the Strickland's return from 2018. Here's the Schedule D, and you can see that on line 5. It says net short-term gain or loss from partnerships, K-1s. So that would be on line 5 under the short-term capital gains and losses. If it was a long-term capital gain coming over from a K-1, then you can use the long-term section of. If this was a long-term capital gain or loss coming over from a K-1, look at line 12 of Schedule D of the 1040. See, here's Schedule D of the 1040. Look at line 12 where it says net long-term gain or loss from partnership, S Corp, estates and trust from Schedule K-1. So the K-1 will direct everything to go somewhere on the 1040. You've got to know where. So everything has to go somewhere from the K-1 to the 1040. And if we look back at Chris's K-1, we can see that we looked at the ordinary business income and the guaranteed payment, line 1 and line 4, and we said they both go to the same place on the 1040. Where do they go? Schedule 1, line 17 of the new 1040. The interest and the dividends, where do they go? Same place, Schedule B of the 1040. And the short-term and long-term capital gains and losses from the K-1, where do they go? Schedule D of the 1040. And as we scroll down, the other item here that you probably would want to know is line 13, that $750 amount. They don't even say what that is, so where would we go to get more information? To get more information about what an item is on a K-1, you'd have to go to Schedule K, because every item on Schedule K-1 is summarized on Schedule K. So line 13 on Schedule K-1, if we back up to Schedule K, we'll see that line 13 says contributions of $1,500. And there's two partners here. So that's why Chris's share was $750. There's two equal partners. And we're just looking at Chris's K-1. So this contribution is on his K-1, line 13, $750. And that means he'll take this home to his 1040 as a charitable contribution, because the partnership can't deduct charitable contributions. But the partner would be able to pick it up as an itemized deduction. And if Chris itemizes, then he'll be able to take that $750 home to Schedule A. Let's take a look at Schedule A. Schedule A of a 1040 is where all the itemized deductions go. And if this was Chris's Schedule A, he would deduct that $750 on line 11, where it says gifts by cash or check. So that would be the same coming over from a K-1. You'd put it right there on line 11. So notice that every line on the K-1 does match up with every line on the K, right? The ordinary business income is line 1 on the K-1. It's also line 1 on Schedule K, right? Line 4 on Schedule K is the guaranteed payment. Back down to the K-1, line 4 is the guaranteed payment. Now, Chris is getting all of this guaranteed payment, so he's not only getting 50%, he's getting the whole thing, because guaranteed payments are something they would work out separately among the partners. And if you watch the video on partnerships, you saw that Chris got the whole guaranteed payment and that the other partner, Jesse, didn't get any of the guaranteed payment. So all that $24,000 will go to Chris's return. But I'm just going through the line numbers now, how line 4 is guaranteed payment on the K-1, line 4 is guaranteed payment on Schedule K. Interest and dividends on the K are lines 5 and 6. Interest and dividends on the K-1 is 5 and 6. So that makes it very easy for partners and partnerships, because all of this gets filed together. The partnership return, the Schedule K, the K-1, all gets filed as one unit, and then the partners get a copy of their K-1 so that they can fill out their 1040. So a lot of times partners have to file for an extension for their 1040 because they didn't get a copy of their K-1 yet, and that's the reason why IRS recently changed the filing dates for partnerships. They used to be due April 15th, now they're due March 15th, to get a little extra time so that the partners could get their K-1 and they won't have to go on extension. Some other things that you may want to be aware of on the K-1 and where does it go on the 1040. Take a look at line number 12 where it says Section 179 deduction. A Section 179 deduction, that's that depreciation deduction where you write off the entire amount of cost of an asset purchased in the current year. So you buy a new asset, boom, you write it off under Section 179. You don't have to set it up, capitalize it, and depreciate it. And that is okay to do, but that's a separately stated item. We said it's not on the front page of the 1065. Instead, it's a separately stated item. The partner will take that Section 179 deduction home to the 1040. And where does it go on the 1040? A Section 179 deduction? Good question. It goes right to where the ordinary income went from the partnership, which is Schedule 1, line 17. Let's take one last look at it.